All right, guys. Good morning. Good morning. We are here today. It is non-farm payroll day. A day I'm kind of excited about. Whew, let me drink some coffee. What's up? Glade, Joseph, Man, Cy, Leo, Ray, ER. Yeah, looking at the queue right now, slightly green, not very much green. Nvidia dipped all the way back down, but they kind of rebounded back up the last like 20-30 minutes. Gold still around lifetime highs, hasn't really broken them yet though. Still got a little ways to go to here. So, whew. What's up, Andrew? It'd be nice if market goes down today. We'll see, brother. We'll see, man. Let's do a poll. Are you bullish or bearish on today's non-farm payroll report? We got an hour and a half, basically. All right, vote on the poll. Let me know how you feel. Oof. A little too hot. Yeah, let me pull the Discord up. Wait a minute. Wait. Did OpenAI raise prices to $200 a month, bro? Dude, OpenAI changed it, bro. So listen, OpenAI ChatGPT 4.0 used to be $20 a month, dude. They recently changed it. So now it's $200 a month to get everything in plus, unlimited access to GPT 4.0, advanced voice, access to deep research in O1 Pro mode, which uses more compute for the best answers to hardest questions, extended access to Sora. So it's now $200 a month for OpenAI. I don't know when they did this. That's a hard like business expense, bro. Like I'll probably still pay it because I love playing with AI. But man. Let me see. Let me try to use 4.0. Okay, never mind. You're right. I can use 4.0 with limited access. Unlimited is $200 a month. But it also gives you unlimited access to Sora, which I think is cool. So the ECB rate, broadly unchanged since 2023. They're saying Mexican headline inflation came out today as well. Alibaba reportedly denies reports of investing in DeepSeek, according to the paper. Well, I mean, can we really knock Alibaba if they invest in DeepSeek? I mean, I don't know what the problem is. I mean, it's a Chinese company anyway, so what's the difference? Who cares? Why are they getting weird about it? Yeah, Palantir, freaking crazy, bro. Absolutely crazy. 114s this morning. Yeah, Gemini's great, honestly. Yeah, I've had it for a while now. All right, so the Bank of England cuts interest rates amid economic concerns. So today, or yesterday, the Bank of England reduced. So what I like about AI is that today I forgot to include finance news, and I just said, give me the biggest news stories of the day. And it remembered that I'm in finance, right? And it only kind of parroted back financial news, right? Like financial news for the most part. And so it remembered who I was and what I was about, and still kind of kept it. So that's good about AI. So yeah, on yesterday, the Bank of England reduced interest rates from 4.75% to 4.5%, a 25 basis point or 0.25% cut, marking their lowest level since June of 2023. This move aims to provide relief to borrowers, but also reflects concerns over their economic growth and inflation increases. So a small rate cut, basically. They're basically where we are now, a little bit over where we are, but basically where we're at now. We're at 4.25 to 4.5 right now, so we're basically at the same spot as them, and they follow us a lot, to be honest. Amazon dropped fourth quarter numbers yesterday. When we take a look at Amazon here, Amazon definitely had a negative reaction to earnings. So Amazon announced fourth quarter results that surpassed expectations. However, the company is down because they missed Amazon Web Service data numbers. So they missed AWS numbers. Market didn't like that at all. They also missed guidance numbers as well. So again, they dropped, 3% in stock price, conservative guidance numbers. And all that stuff. So yeah, that's interesting to look at. Fertilizer producer Yara International reported a net loss of $290 million in the fourth quarter, primarily due to a $260 million net foreign currency exchange loss attributed to the strong U.S. dollar. There is some crazy weather in Australia right now. The Bureau of Meteorology has issued a warnings for life-threatening flash floods in Queensland and severe storms in northeast Victoria. Residents in these areas are advised to stay alert. So flooding in Australia. And of course, some stuff going on in politics. A U.S. judge has temporarily halted the new administration's buyout proposal for federal workers, which has already seen over 60,000 employees accept the offer. Investors are also watching for today's job report, of course. Big job report today. Investors are monitoring the release of the January employment report, expected to provide insight into the labor market strength and influence future economy. So yeah, payrolls today. Payrolls today are expected. Let's put this up on screen here. NFP data drops at 8:30. Right here, and is expected at 160. It's about 168K. Unemployment. At 4.1%. We'll leave that up on screen. Alright, so here is the release today. Let's lower myself so I'm not kind of floating off the ground some here. There we go. And again, I'm looking at ELF. ELF is all the way down to 64s, man. ELF Beauty. They dropped, no joke, man. They are just down big on their stuff, man. I don't know what happened to them. ELF is down. We saw this yesterday in the earnings release. ELF's down to 65.40s. Big drop there too. Why you care about ELF? Because it's a pretty well-known stock that tanked like 20-something% yesterday. It's a stock everybody's really been watching. ELF Beauty. I don't really know much about the company. I don't know what they sell or anything, obviously. Is the music too loud? My bad. Oh, it's from the earnings call. I remember I turned the volume up yesterday. My bad, guys. Yeah, I think they almost like auto-correct the music here to help me out. Yeah, here, I'll fix it. Hold on. Is the music too loud? It should be pretty good, but let me know. Yeah, the music should be pretty good. I mean, let me know if it's too loud. If it is, I'll lower it. Hey, happy Friday, guys. Yeah, I know it's cosmetics. I just don't know it. I don't know about their products. Like, typically, I like to invest in things I use. And obviously, I don't really use Elf's products. I just don't know what they are. But they've had a crazy, like, the reason I've been paying attention to them, as has a lot of other people, they're very similar, like... They're very similar to, like, I would say, like, Hims in terms of their long-term trend. Like 670s a couple years ago, they went all the way to 220s. So just a crazy big investment. If it's too loud, you're too old. They aren't buying makeup, Richard. I don't know, dude. I think, you know... I don't know, dude. I think everybody cares what they look like, you know. I've always found a lot of irony in people who go around telling other people that they don't care what other people think. And that's obviously not true. Like, everybody cares what other people think. Like, it's human nature to care about what the pack thinks. You know what I mean? Like, it's just human nature. And so the irony is that people who say they don't care about what people think care the most about what people think, because they're going around trying to tell people that they don't care, spending time and energy on it. It's kind of like if somebody's like, I don't care what people think, I always tell them, like, hey, then why don't you wear a cardboard box outside as your clothes and not worry about it, you know? Like, why buy any nice clothes? Just go outside, wear a cardboard box. If you really don't care, you really don't care. And so the reality is people want people to think they don't care about what people think, you know. So that might have gotten a little unnecessarily confusing, but overarching point is people actually care, and anybody that says they don't is full of crap. Yeah, he actually doesn't care, Pawn. Elf got rejection in the 108 area, so structuring a trade buy at 65, looking for a bounce to 105 does make sense. I agree. Honestly, I'm not telling anybody to buy Elf. To be honest, it depends on their margins, and so with all of that said and out the way, let's take a look, right? Like, let's take a look at Elf. So here's Elf's margins, right? I would normally be like, yeah, let's buy Elf, you know, right here. The problem is that these are their margins, guys. You know, now, while they're making money technically, you know, a company that was 220, craziness, making 40, 50, I guess this is kind of on par with some of Tesla's numbers sometimes. I guess the numbers are bad. Maybe this just skews it. Let's put a 5-year graph up. Okay, so they're not looking bad the last 5 years. So these are the numbers you really got to look at. Let's take a look at their revenue. Revenue's pretty good. Made over $1 billion in revenue last year. Here's their revenue trends. It's pretty good. It's not bad. I'm wondering what they show up at yesterday for Elf. What's the PE ratio of Elf? This is where AI is really useful. Elf's PE ratio is about 47, so it's a little overpriced still. That's at a stock price of, yeah. The new price is 65 a share. What is the PE ratio now? All right, so the PE ratio is currently about 19 for Elf at these current prices. So there is some value in terms of margins for Elf right here. I'm not telling you to buy it. I have no freaking idea what I'm talking about. And I might be wildly wrong about everything I say. Don't copy me. I'm not an investment professional. I'm not liable if you lose money. you know, blah, 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 blah. Understand all this stuff. Don't copy me. If you copy me, you might lose. I'm the worst trader ever. You know, understand CFTC 4.41, hypothetical or simulated performance have limitations, guys. All that stuff. Basically, don't sue me because you're not going to win because I'm telling you I'm terrible and not to copy me. With that said, though, the PE ratio of ELF down here is pretty low. It's at like 20 right now. When I say I don't care, I do want people to think I'm attractive. But if they don't like my character, my actions, I really don't care what people think. Yes, you do, though, JP. You do, though. Everybody does. Everybody, look, it's human nature. Like, people want people to think they don't care. Because I think sometimes, like, somebody that doesn't care about what other people think is seen as more endearing, right? Like, it's a more endearing quality to just not care what people think. But I'm here to tell you that's nonsense. Everybody cares what people think. In both ways. And so, coming from the person who cares, the top 3 most cared what people think person in the world right now. The person that is one of the top 3 people who cares what people think. Everybody cares what people think, bro. It's human nature. Yeah, Palantir, freaking crazy PE ratio. Let me see what Palantir PE ratio now. 586 PE ratio for Palantir right now. Freaking 586 PE ratio. Maybe their margins will catch up to it. I should have streamed their earnings. I really should have, but it's all good. Okay, JP. It's all good. I believe you, sir. Yeah, live your life. It's all good, brother. It's all good, dude. Like, I could go deep into this argument, JP, just for fun. And you guys know me. I got the debater personality type, so I like going back and forth with people. And if I was going to go back and forth with somebody, I would say you commenting here shows you care what people think. Because if not, you would have just said, hey, I don't care what John thinks. I'm going to live my life, you know. John, what do you think are going to reaction data for U.S. Wall Street and NFP? Yeah, everybody cares. You just can't get hung up on it 100%. Like, everybody cares at least to a certain extent, right? To a certain extent, everybody cares about what people think, about how they look, about what people view them as. Everybody cares to a certain extent. That's human nature. The overarching point I'm making is it's human nature to care. Now, listen, I'll argue all day about this. I think the point, you're probably, just to help you out a little bit, I think you're probably just generalizing things. Like, relative to most, you don't care, right? You still care a little bit. Everybody does, right? But relative to most, you don't care. That's what I think the point you're trying to make is. And if that's your point, it's all love. It's all good, dude. All right, guys, 64% bullish, 36% bearish on the poll today for NFP data. NFP data is expected at about, again, I think it's expected at about 165 to 170. Market Watch has it at 165. Yeah, we got unemployment expected at 4.1%. Average hourly earnings dropping at 8:30 as well. Let's get the timer up. I haven't got a timer up yet. So we got an hour and 6 minutes left, chat. Yeah, definitely top 2 thinkers ever in the world. Yeah, but that means you care, Ty. Everybody does. I don't want to look like a homeless guy either. I get it. Right, 100%, Sam. That's exactly right. I care what you guys think, to a certain extent, you know. Everybody cares. Please do answer which question. What's your question, sir? Top 3 best disclaimers of all time ever in the world. What's the question? What's up? Why don't they include the farmers? Because farmers' data is just much different and much more volatile. Like we can ask AI. Farm is high seasonal and subject to large fluctuations in volatility. Yeah, distort overall employment trends is what it would do. Agriculture jobs are often informal, seasonal, or undocumented, basically off the table. And so it would just kind of skew things. Yeah, at this point, Ty, I'm just kind of trolling people. Anybody that says they don't care in chat, I'm telling them they do. And I kind of mean it, but I'm also kind of just trolling people with it. So it'll be all right, brother. You'll be okay. Any news today? Yeah, we got non-farm payrolls data. Huge report. Incredibly volatile report today. Yeah, really relevant report. Pay attention. It's an important report. What an interesting conversation today. Do people care what other people think? Of course we do. Everybody does. You know, now again, what I think people are trying to say, that we keep going back and forth, I think people are trying to say that they care less than the normal person. And that might be true, right? But everybody cares a little bit about what people think, about, you know, everything. Yeah. It's normal. It's human nature. Definitely top 3 ever. John, what do you think are going to be the reaction for you? I think higher is going to make the market panic, to be honest. That's kind of what we got last time. Although we've seen some indications of data that show a different reaction than that lately. And so it's never 100%. It's certainly not a for sure thing. I think that the market fears inflation right now. And so I think the market fears inflation, and overall that might be the reaction that we get. If we get higher payroll numbers, the market might panic and go down. But I don't know for sure. Again, we've seen some hints of data that suggest something different at this point. Just over the last few weeks, I would say, last payroll report, we got a similar reaction where we dropped all day. We dropped initially, and we dropped all day from much higher than expected payroll numbers. And so I would assume we're going to have a similar thing today, but it's definitely not a certainty, like a for sure thing. And yeah, it's something that we just got to keep on watch for and just react to. I'm not going to try to predict it too heavily. I still think we're going to have kind of an inverse correlation to convention, where we're going to do where stronger economic growth and payrolls is going to be seen as a bad thing for inflation and negative reactions, but it also could go the other way. We don't really know for sure. Yeah, join our Discord. There's the Discord link right there. In fact, let me know if that Discord link works. It should work. Let me know if it does. Right, exactly, Sharp. That's honestly the truth, right? If somebody's like, I don't care, I'm like, yeah, you do. It's the truth, but I'm also kind of just poking at them a little bit because it's the truth, and you know, and then really it's kind of an experiment. And then the more they try to tell me they don't, the more I realize they actually do, because they're trying to convince me they don't. You know, yeah. I'm like Pavlov over here, bro. Listen, I'm like Pavlov. I'm a scientist right now. Anyways, the NASDAQ very choppy and sideways. I'm wondering if we're going to get choppiness leading up to this as well, if we're going to get sideways neutral action. NVIDIA up there also, chat. With that logic, do you think the market will react positively to low NFP data? I think it's possible. It depends on how low. I think too low might make the market freak out. But I think if it's slightly or kind of like a reasonable amount lower than expected, I think the market might go up. And same thing for payrolls. I think, except for payrolls, I think it's the opposite. If it's way higher than expected, I think the market may go down. But who knows? Thoughts on Palantir? If you're already in Palantir, personally, if you want me to be honest, like I'm gonna be brutally honest, and listen, I'm gonna preface this with like, look, we don't have to agree on a stock for you to watch the stream, right? We don't have to agree on a stock to watch the stream. If I was in it, and I'm not an investment professional, do not copy me. I have no freaking idea what I'm talking about. If I was in it, I would take most profit off. I might leave a little bit, but I'm taking most of my profit off of Palantir at this point in time. Why? Because the PE ratio is almost 600 right now, right? Almost a $600 PE ratio is obscenely high. That is crazy numbers, crazier than AMD was in the heat of the AI boom. Like just crazy. Like 600 PE ratio is out there. It's up a huge amount, and I think it might go up more. But I think when the selling starts, it can get brutal really quickly for something like that. And I like Palantir long term. I think it's a good long term company. I just think a $600 or a 600 PE ratio is obscene. It's crazy. It's just way too high. And so if I was personally holding it, I would probably take some profit. But I'm a huge wimp, and what the heck do I know? And big risk, big reward, I guess. But for me, I would take profit. What I would probably do, I'd take 80% off, leave 20%, and let it sit, and then be very strict with cutting it if we have like a string of bad movements throughout, a couple week period or something like that. That's what I would personally do. But I might be wrong. Don't copy me. It might keep running up. The momentum is definitely on the bull side right now. I'm just nervous about like 600 PE ratio and super deep extension over the last few weeks and months. Yeah, it's got a 600 PE ratio. And if we look at Palantir's EPS graph, right? I mean, Palantir's, the trend looks good. But it's, 600 PE ratio is a little out there. Like the trend looks good. Like it's making money. But like to put this into perspective, guys, what did PLTR make last quarter? When did they drop earnings? It was last week, right? What did they make last week? What was their EPS last week, guys? Let's look. See if I can go back. Yeah, so what did Palantir show for their EPS last time, guys? Somebody help me out here. This one is a little late, a little delayed. 17 cents. 17 cents is good, right? So 17 cents would mean it's their best quarter ever, and that's great. And this is a good trend. And if AI continues to grow, it's great, right? Like that's like up here now, and that's great. But it's making 17 cents a share. 17 cents a share. It's not making dollars a share EPS. It's making 17 cents. And so I'm just a little skeptical, to be honest. And again, I missed out on I didn't miss out on all of it. I profited a lot from Palantir throughout its run, to be honest. But at this point, it's 600 PE. It's way up there. It's up to $115 a share, and it could certainly continue running. It's just the value isn't there for me right now. The value just isn't there. Easiest way to put it. And I hope you guys make money on it. I really genuinely hope you guys like kill it and make big money on it. I really do. Bro, the amount of people that are making ridiculous YouTubes about trading, like they're trying to think of any differentiating factor and they're naming their YouTube channel around it, dude. It's kind of hilarious, It's like if I got green eyes, green eye trader John, green eye trader on YouTube. If I got a camo hat trader on YouTube, Purple socks trader on YouTube, guys, White Nike hat trader here, guys, Brown hair guy with a beard trader is here, guys. Like everybody, like listen, like it's dumb, bro. Stop making names like that. It's silly. It's ridiculous, Like, your hairstyle has nothing to do with your trading. You know what I mean? Like, get out of here. Like, it's stupid. It really is. Like, be smart, guys. Maybe I'm just a hater. I don't freaking know. I saw a couple like this. Hey, nice, Jan. Congrats, dude. Wall Street has always had their darling stock that gets pumped. Palantir potential growth is endless. Yeah, 100% Dragos. It could keep running, man. It really could. I'm not a bear on Palantir. I'm just nervous about it. I hope it holds though. I hope people make money. I've never been a hater where if people make big money, I've been mad about it. All right, chat. What is your bias, bullish or bearish? AirPod. Old AirPod, not AirPod Pro trader is me, guys. Mama's bank account trader, yeah. Well, you can use my link, you'll get a, you know. You like my new thumbnail, brother? Yeah. Again, higher, lower payroll data. Payroll's expected at 168. Unemployment at 4.1%. We'll see what we hit this morning. We still got 55 minutes left. 55 minutes. It's a big report, chat. A big report. Be ready. Non-farm payrolls data coming out. Whew. Bro, I swear, bro, if people try to steal my style, I'm the only self-deprecating person on YouTube in trading. I'm the only one that can tell people that I suck at trading, okay? I swear, dude, if people try to piggyback off of that, I'm going to call them out 100%. Like, come on now. People know it's the smart way to be, and I guess I should welcome it because I have created a way for people to stop lying to people and stop telling them that they're the greatest trader of all time ever. Like, I see somebody else that's kind of big now posting not a great trader or something on their stream, and I'm just kind of like, dude, how dare you? Higher NFP may be bearish for markets. Yeah, I mean, yeah, higher NFP data means a rate cut is less likely and inflation potential could be much worse, right? Like, higher NFP data means inflation data could be worse, less likely that we're going to cut rates. Lower payroll data could mean more economic weakness, better inflation, and more likely for rate cuts. And I think that's what the market wants. I think the market wants cuts, and we'll see. Which article? Ten-year Treasury. Okay, I see it. All right, so in recent discussions, Treasury Secretary Scott Bessent highlighted that both he and the president are concentrating on 10-year yields as a key indicator for economic policy. This focus represents a strategic shift from previous amendments, which often emphasized the Fed's short-term interest rate decisions. Bessent clarified that the administration's primary concern is the 10-year Treasury yield, which sees significantly influence borrowing costs for mortgages, business investments, and government debt. He stated, quote, "The president wants lower rates. He and I are focused on the 10-year Treasury and what is the yield of that." So if you want to check a look at the 10-year Treasury on it's TNX, right? TNX CGI is the yield, is the 10-year Treasury yields. Now, it's not open yet. Last time it was 4.4%. And if you want to know what the interest rate is, you just move this over a decimal point. So you just put it here, and that's the interest rate, right? So if it's at 44.4% or 44.4 in price, you move the decimal place over 1 and you put the decimal place here instead. And so the actual interest rate here is 4.44%, basically 4.45, 4.5%, close enough to it. That's yields. And remember, guys, the correlation is this. I always tell people the correlation, I'm not even mad at them doing this. I think it's probably a little bit better gauge of interest rates are going, especially like mortgages. But the way you look at this, guys, is higher yields signals higher interest rates. Lower yields signals lower interest rates. All right, and that's the way you want to do it. Higher yields signals higher interest rates. Lower yields signals lower interest rates. Hey, hold on. Let me mute this. All right, guys. Yeah, so the T and X, guys, again, we're going to have an inverse correlation with yields and the underlying bond prices. And so an example of this is like if we pull up TLT, it's going to do basically the opposite of what yields do. Now, again, TLT is already open. Yields are not open yet. But if we look at like yesterday's price action on both of these here, I'll put a 5-minute chart up on both of these. Yields dropped all day yesterday, and if we look at a 5-minute chart for bonds, the bonds didn't really move. It's kind of, it's not the perfect correlation. But again, bond prices, which is like TLT is prices, they're going to move inversely to yields. Yields and bond prices are inverse to each other, and the easier way I like to track things is, again, yields and interest rates follow each other. And so if the Fed's going to be more hawkish, and it's really kind of vice versa. If the Fed's hawkish, yields are probably going up. If the Fed's dovish and they want to cut interest rates, yields are probably going down, and the underlying bond prices are going up, right? And that's the way to watch it. But I like 10-year. I watch 10-year a lot. I think 10 years is a really good way to look at yields in general. Where's Bitcoin at? Bitcoin at 98K. It's been flat. I thought Bitcoin would consolidate in the 90s. I've been saying this for freaking months, and I've been right. It went up to 108 for a little bit, but it's been consolidating in the 90s for a while now. All right, chat. Again, subscribe. Hit the notification bell if you haven't already, chat. We appreciate the love. Thanks so much. We got payroll data today. It's a big day. It's a big report. I'm sorry about the music. Let me find this. I don't know what to do with this music. I guess I'll leave it. What do you guys think? Should I leave it or no? Kind of sounds like Skrillex. Quick thoughts on the unemployment under or over expectations. I mean, unemployment's a little bit better. I mean, unemployment is one of those things where typically we're conventionally looking at it like lower unemployment's better regardless. Higher unemployment's worse. The market's mostly going to react to payroll data though. So the market's mostly reacting to payroll data. All right, guys, be ready here. Payroll data coming out live today. It's a big report. It's a big data release. It's something that we all want to pay attention to. Just be ready, Chad. Be ready. All right, chat. It's the day. Accumulation music's all right. Get the energy going. Top 3, everything. You guys know. All right, guys, we got 45 minutes here. 45 minutes until this data release. We got about 600 here already. I think higher payroll is worse, personally. I think it means more inflationary pressure. Yeah, less likely for us to cut. I think the market wants cuts, personally. Again, hit the like button. Bump that number up here, chat. Yeah. Yeah, I'm trying to figure out. Yeah, so again, unemployment data. If numbers are bad, NASDAQ and Dow will rise like gold, right? Not necessarily. We don't know. We can only speculate. I found you through streams, and you become my podcast while I work. Hey, thank you. Bye. Bye. Hi. Thanks, man. Appreciate the love. Market's got me becoming more and more bipolar. Yeah, that's how it goes, dude. My heart says bullish. My brain says otherwise. Yeah, it's been a really interesting 3-week period. A lot of news coming out. We had the DeepSeek news. We had the tariff news. We had economic reports, the Fed meeting with a little bit more hawkish Fed, all that stuff. And so, yeah. All right, so yields open up at 8 a.m., so we still got 15 minutes for yields to pop open. We'll watch the yields when they drop as well. It's a relevant time for sure. Bank of England's Hill says there's an ongoing disinflation process in the UK. House Speaker Johnson says reconciliation bill will be announced this weekend, and there's ongoing discussion on it. SIBO Global Markets had earnings drop at 2.1 EPS versus 212, missed. Revenue at 524.5 versus 530 expected, missed. So SIBO missed EPS and revenue. We had Mexico core inflation come out 3.66 versus 3.7 expected, 0.41% month to month versus 4.5%. So lower than expected everywhere for inflation there. Again, Alibaba denied investing in DeepSeek as well here. So that's an interesting look too. You look like John Krasinski? Bro, people think I look like everybody. Like, I've literally heard on, like, every freaking, like, who do I really look like, guys? Let me know. Who do y'all think? I don't see John Krasinski. I wish I was as tall as that guy. What outcome is good for Bitcoin from this report? It depends, man. Bitcoin can kind of macro follow markets, and so it depends on what the market fears. Here's the way you look at payroll data. What does the market fear at this point in time? Do you guys think the market fears economic weakness, like recessions, depression, stuff like that more? Or the other side, which is inflation, right? If the market fears economic weakness more, they want stronger payrolls because a stronger payroll report shows a stronger economy, and a stronger economy obviously is better for recessions and depression fears. If the market fears inflation, right, which I think is what it fears, but if the market fears inflation, higher payroll numbers can signal worse inflationary pressure, worse inflation problems, not better. And so you got to ask, what does the market fear right now? And in fact, I think there's a really good poll option, right? A really good poll option. So let's ask right now. What do you guys think? Let's do a poll right now. All right, so we're going to do a poll. Does the market fear... Wait, did I just end the poll or not? Yeah, I did. Okay. 65% are bullish. 34% are bearish. We're going to do another poll right now. Does the market fear economic weakness or inflation more? And this will dictate what it's doing with payroll numbers. Does it fear economic weakness or inflation more, guys? Let me know how you feel in chat. Let me know what you guys think there. All right, guys. It's a massive report. We got about 700 people here. Yeah. 40 minutes left, chat. 40 minutes left. Yeah, we're not going to mention other streamers too much straight. And again, if y'all do, it's just going to get deleted. I'm not trying to get involved with drama. And so y'all aren't going to hear me talk smack or say anything about other streamers or content creators. It's just not my style, man. Inflation short term, but economic weakness long term. Yeah, I feel that. That's possible for sure. For sure. I said for sure. For sure. For sure. Should I just say faux show? Yeah, guys. So again, you got to understand it like this, okay? And let's talk about it. Let's talk about why this report's important. Let's hype it up a little bit. The most anticipated jobs report of the month is here today at 8:30 in about 40 minutes. At 8:30, the non-farm payroll and unemployment report will drop, shaking markets and setting the tone for the next Fed move. This isn't just another data release. This is a market-moving event that could dictate the direction of stocks, bonds, the dollar, even crypto in the coming weeks. And let's ask ourselves, why does this matter? A strong NFP, the Fed might stay hawkish, keeping rates higher for longer. Bad news for stocks, but could boost the dollar. More payroll numbers could boost the dollar index and give some optimism in other markets. But again, a strong NFP way above expectations. The Fed might stay hawkish, means less rate cuts, rates higher for longer. Bad news for stocks, dollar strength potentially. A weak NFP report could lean dovish, opening the door for rate cuts, potentially sending the market soaring. All right. Unemployment rate is also important. If joblessness jumps unexpectedly, it could signal cracks in the economy, making a rate cut almost certain. And so some people are saying maybe higher unemployment number is good, not bad. NFP forecast is expected at about 165 to 170,000. Today, last time it showed up at a shockingly 256,000 number, which is crazy high. Crazy high. Unemployment rate expected at 4.1%. Guys, 4.1% is what they're expecting today for unemployment. 4.1%. Average hourly earnings are also dropping today. Month over month for January, they're expected at 0.3%. Last time they showed up at 0.3%. And that's something that we will absolutely cover as well. I did it for the shoe. Top 3 shoes ever. But yeah. Forget the estimates. The reaction is what matters, guys. What happens here is the most important. I would be a reactive trader. Futures traders, hedge funds, and the biggest institutions are all positioning for massive volatility today from the non-farm payroll report. Expect big moves in the S&P, the NASDAQ, maybe the Japanese yen, gold, even Bitcoin based on the outcome of this. Another question is, will this report confirm strength in the economy, or is the slowdown already underway? And will we get earlier rate cuts and more rate cuts in 2025 than expected? Will it force Powell's hand on rate cuts is what you should be asking. Buckle up. This is the moment for traders. This is the moment we live for here in non-farm payroll report, unemployment, huge report. We'll see what happens here. Chat. No cutting rates, in my honest opinion, not under. Well, we're going to cut rates at least a little bit, right? Like, we could look at the CME watch tool to gauge, like, rate expectations. And again, if you don't understand what rates means, listen, we got almost 800 people here. And so I know some of you guys probably don't understand what all this means, and I'm here to teach you, okay? I'll break it down for you. The Federal Reserve is the bank that kind of creates policies and influences other regional banks, right? And there's heads to each. There's heads to all the regional banks. That's why when you hear something called Fed member blank, or FOMC member blank, those are the heads of regional banks. And then Jerome Powell is the chairman of the Federal Reserve, the big bank, basically. But all of them create policy for banking and economic policy. One of the things the Federal Reserve does is they influence rates, right? And the rates we're referencing are short-term rates called the federal funds rate. These are the rates that banks charge each other to hold and lend money overnight. But eventually, when they control those rates, it trickles into all the other rates as well. Some in direct and some in indirect ways, like mortgages are indirectly affected by it. Short-term loans are directly influenced by it. Home equity lines of credit are directly influenced by it. Adjustable rate loans are directly influenced by the rates that the Federal Reserve controls. And so if the economy is weak and people are scared because the economy is weak, the Federal Reserve can cut interest rates. This brings interest rates down, and the net effect of it is that people have cheaper access to loans. They have cheaper access to money and thus are able to get more loans and spend more. Businesses can get more loans and the economy can expand. And so lowering interest rates stimulates the economy in that way. It's called a dovish Fed, a Fed that wants to lower interest rates with loose economic policy. Like, they're okay with interest rates being low, it stimulates it, but there's a consequence to it. If there was no consequences, the Federal Reserve would just never endingly cut rates, right, and keep interest rates down. There's a cost to it, and it's inflation. You know, when people are spending so much money, inflation tends to rise, businesses tend to raise prices, right? And so that's something that happens in this situation, where, like, an example of this, in 2020, the Federal Reserve did something called quantitative easing, which is a form of money printing where they create bank reserves and they use those bank reserves to buy up bonds and other financial assets. This makes inflation much worse, much faster, number one, but it's also bringing interest rates down. It also can kind of save us from a really weak economy a little bit faster, but it's a more desperate move, right? It's called quantitative easing. But again, it can make inflation much worse. And that's something we saw in 2020. And, you know, we kind of rebounded from all the stuff in 2020 a little bit faster than we would have if we didn't do QE and lower interest rates down to almost zero at the time. But the consequence of all this was 10% inflation following it in 21 and 22. And so then the Fed can play the other side, what's called a restrictive Fed or a hawkish Fed, where they raise interest rates, or they do quantitative tightening where they reduce their balance sheet instead of expanding it through bond purchases. They reduce their balance sheet by letting their bonds mature and run off their balance sheet. It's called quantitative tightening. They could also rate hike, do a bunch of rate hikes, raise the federal funds rate, because that makes interest rates worse for people. They have less access to money and they ultimately spend less, and this can make inflation go down, right? And it's a balancing act by the Fed, depending on what situation they're in, you know, will influence what decision they make in those periods of time. So it depends on whether they think they need to raise rates, lower rates, all that stuff is going to depend on what the economic state of the country looks like. And that's interest rates 101. That's basically how economic policy is influenced depending on economic strength or weakness. But now we're at a point in time with today's payroll report in which the market fears inflation. You know, the market fears inflation. Over the last 6 Fed decisions, we've cut rates 3 times. 3 times, bringing interest rates down, stimulating the economy. And, you know, a lot of people are pushing for more rate cuts. They want rates to come down more. Right now, we're at about 4.25 to 4.5%. And when you hear basis points, it's just quarters of a percent. 25 is 0.25%. 50 basis points is 0.5%, so forth and so on. Right now, we're at 4.25 to 4.5%. A lot of people are pushing for cuts. The market kind of wants cuts, but the Fed's fearing inflation to a certain extent. And so I don't know if we're going to get cuts. One of the things that a strong payroll report will show is that we don't need a cut because the Federal Reserve has to have a reason. And if payrolls are strong and the economy is strong, the Fed's not going to cut rates like like a lot of people want them to. And so a weak payroll report might make the market react positively. Why? Because the market kind of wants rate cuts. And so that's kind of where we're at now in all this stuff. Yeah. Hey, what's up, Beach Bum? Yeah, y'all go check out Beach Bum. Give that man a subscribe. Need some more likes for this guy's hard work. Hey, thanks so much, man. Yeah, the makeup industry, I don't know it. I invest in what I know. I don't know the makeup industry. I think there's a chance we might bounce back, though, for e.l.f. And I talked about it earlier. e.l.f.'s PE ratio is about 19. That's very low. Objectively, relative to all the other stocks right now, it's pretty low. But it doesn't mean it has to bounce back. It just, the PE ratio is good. The price to earnings ratio. Yeah, all good, Lazarus. Hope that makes sense, man. A lot of people struggle to understand this stuff. It's pretty easy once you start to really gauge it and understand what's going on in terms of like economic policy in the Fed. Do you think today going to happen same as last Friday? I don't know, man. Last Friday we had PCE inflation, and so a little bit different report. PCE is a direct look at inflation versus today's NFP report, which is kind of a direct look at the economy. I'm not sure what you're trying to say, Tibet. The Federal Reserve, what happened with the Federal Reserve? So the if we look at the federal funds rate, right? If we look at the federal funds rate, all right, like, so here's the federal funds rate. Okay, this is another way. So this is the rate that the Federal Reserve controls. We look at a 5-year trend, or let's look at a 10-year trend. Okay, so again, 2020 we had lots of economic weakness. And so what did they do? They brought interest rates down to almost zero. You can see how close to zero these rates are down here. Following 2020's kind of crazy macroeconomic event of 2020, they dropped rates to almost zero to try to stimulate the economy as like a panic. They're like, oh no, look what's going on. People aren't working, lockdowns, let's bring interest rates down to almost zero. And they did, and they kept them low until 2022. One of the things that happened in 2022 that made them start raising rates back up here, one of the things that made them start raising rates back up here, you can see in 2022, was inflation. If we look at CPI inflation over this period of time, here's CPI inflation. If you look at the correlation here in that way, right? And CPI inflation started to spike up to almost 10% right here. And it happened around 2022. Like, here's 2022, you know. And so the Federal Reserve saw this and said, oh no, inflation's up to almost 10%. We can't keep interest rates this low anymore. And so what they started doing is they started raising the federal funds rate, and they raised it all the way to 5.25%. And then they paused it there until September, I think, of last year. They paused rates basically for the full year. So this entire year from 2023 to 2024 and a half, or from mid 23 to mid 24, they paused interest rates. They didn't move them. And then they only started cutting rates in September of last year. And again, they did 3 consecutive cuts. They did 50 basis points, 25 basis points, 25 basis points. And then the last Fed meeting was in January, where they paused for the first time. So the last decision was here, and they paused. They kept it the same, right? Like, that's economic policy over the last few years, and it makes sense, right? Like, when you start to understand the correlations, it makes sense. How does NFP impact Bitcoin? Well, it could impact Bitcoin a lot. We don't really know. Yeah, we still got 30 minutes until the NFP reports. We don't know. Are there any, I mean to say, is the rate cuts for 2025 already started last year 2 times? I'm not sure what you mean, T. Why are farms not on this report? Because farm jobs are incredibly volatile and just vary a lot. They go up and down and sideways a lot, and so they're just really varied in data, to be honest, farm numbers. They're seasonal. Sometimes they're under the table. It could just influence them too much, and it kind of hurts the look at actual jobs. Really low PE is not a good measure for valuation. The lower PE, the more everyone expects the earnings to go away soon. A low PE ratio means high earnings relative to share price. So, yeah. Why does NVIDIA start to fill the gap today? Options. Somebody said, John, is there any sector that benefits from higher rates? Yeah, banks. Right, like banks make their money in the margins between what they give consumers and what they really get the rates for, or the loans for. And so they make their money in the margins, and so higher rates can benefit them in that regard because of more room for their margins, if that makes sense. All right, chat. Again, hit that like button, guys. Hit the notification bell. Thanks so much. Yeah, banks benefit. What I meant to say is the last 2 rate cut was for this year. Well, it was in September is when they cut rates. So. All right, guys. Again, smash that like button, hit the subscribe button. We're gonna put gold up on the chart. It's important to look at gold here. Gold's been testing all-time highs. I mean, I think what you might be saying, Tibet, is that there's a lagging effect between rate decisions and the influence it has, right? So there's typically a 6 month to a year lag before the rates have any effect on conditions. I think is probably what you're trying to say, and that's true. Yeah, there's government payrolls on this report as well. So we have private payrolls, non-farm payrolls, government payrolls. Government payrolls for January. Last time they showed 33,000. We also have average hourly earnings. And again, we got 24 minutes left. Yeah, smack the like button, hit the subscribe button, chat. We appreciate the love. Thanks so much. Let's break 1,000 viewers. I'm gonna put it out there. We're gonna get over 3,000 viewers today for this stream, at least. Looking at our poll numbers, this is a pretty split thing, right? So, you know, some people were acting like people just choose one option. We asked people, does the market fear economic weakness or inflation more? 54% say inflation, and I tend to agree. I think the market fears inflation more. I think GDP is over 2.5%. Unemployment's been pretty freaking low. Inflation has been a fear in everybody's mind with everything going on lately, and it should be. I fear inflation more than economic weakness. In fact, I would much rather us go into a recession than see inflation spike up to 10% again. And everybody here should fear inflation. It doesn't matter how much you make. Inflation hurts everybody. I've said this before. I'll say it again. $100,000 used to like be something big, right? Making 100K used to be like a big flex, right? Right now it's not, right? Right now you make 100K, like, yeah, you're doing okay. It's not like you're doing bad, but you're not wealthy, you're not rich like it used to mean. And that should scare everybody, because pretty quickly it's going to turn into 200K. That means that where it's not a flex, 300K, so forth and so on. If inflation continues to rise at these unprecedented levels, not unprecedented, but if inflation continues to rise like they have the last 5 years, we should all be worried. And so if inflation should be everybody's fear. It's certainly my fear. And yeah, I would much rather us correct a little bit in the economy versus enter a deep inflationary market. I think gold will hit all-time highs today after a quick pullback. Maybe. Yeah, stagflation. To put it into perspective, what stagflation means is a period of time that can indicate a recession in which the market has high inflation but also weak economy. So weak economy but also inflation problems. It's the worst of both. Stagflation is what it calls. It can be a recession indicator. I don't necessarily see that, though. Inflation's still pretty reasonably under control. It's at 2 point something percent, right? The economy has been a little bit too strong than expected. So if anything, right now we see relatively low inflation as well as a strong economy for the most part. It's an election year, so people are all skewed in different directions for this type of stuff. Election years, everybody wants to think it's the worst it could ever be. Cough, cough, elect our guy, basically is what they say. The other side says, look how great things are. Cough, cough, elect our guy. The truth is somewhere in the middle. And, right now, at least right now, we're not seeing weak GDP. We're not seeing weak payroll numbers. Unemployment's pretty low. It's under 4.5%. None of those things signal economic weakness, right? For the stagnating economy that people might claim with stagflation. Also, when we look at the last inflation pressures, right? PCE inflation showed up at what last week? 2.6%, 2.8%, 2.6% for core. And so under 3% PCE. And so I don't see stagflation right now. And if you guys see it, let me know. I'm not saying it's not there. Maybe y'all see something I don't. Let me know, but I don't see it. Does a stronger dollar mean low inflation? No. Opposite. Strong dollar means high inflation. All right, guys. No, I'm sorry. A stronger dollar does mean lower inflation, not higher. Sorry. When the dollar strengthens, it increases its value. Sorry, I got it backwards. All right, guys, 20 minutes. 20 minutes. Yeah, give your boy a follow on X here, guys. Oh, I got to do my report. All right, chat. All right, so again, guys, we'll give you guys the biggest story in finance. Goldman Sachs has issued a cautionary note titled "The Left Tail Reemerges," highlighting potential financial market risks associated with tariffs. The firm advises investors to reassess risk premiums. Morgan Stanley reduces Twitter debt exposure post-election. Banco Santander expands U.S. investment banking operations. Yeah, so here we go, guys. Here we go. And again, give me a follow on X. We're going to give you guys the biggest stories of the day. Yeah, it worked. I don't know. It depends on what you call a beginner. All right, guys. 17 minutes. 17 minutes here, chat. Be ready. You guys ready for payrolls? Again, we still got some time here, man. Gold dipping down a little bit. Q is flat but down slightly on the day. Nvidia is flat but down slightly on the day as well, chat. Hit the subscribe button. Hit the notification bell. Yeah, this is a big non-farm payroll report, guys. A huge report. Just be ready. Yeah, again, non-farm payrolls, unemployment report's a massive report today, chat. So just be careful, man. You just gotta be ready here, man. Why is this one bigger than normal? Because last time we showed, because again, there's a couple factors. New administration, critical of the Fed. The last payroll report showed 256,000 payrolls, tanked markets out of fear because of inflation worries. Absolutely tanked markets. We also have unemployment today. After first revision GDP data last week, we had PCE inflation data. And so this is a huge report. It's a huge report. The Federal Reserve doesn't know whether it wants to cut rates super or more than they did last year in 2025. They're kind of at a middle road, kind of a fork in the road there with that type of stuff. And it's just a really important report today because of new year, economic uncertainty, inflation fears, higher payrolls last time, new administration. There's a lot relying on this report today for sure. It's going to today's report really specifically is going to signal what the market fears. All right, guys, stick around. Gold. We got 14 minutes left here, chat. What do you think the percentage chances that the expected amount of cuts this year changed from 2 after this report? So, yeah, if we look at the expectational numbers here right now, it's pretty overwhelmingly expected that we're going to pause again next meeting. We're still looking like we're going to pause the next 2 meetings up until June, right? So it's looking like right now it's expected that we're going to pause interest rates up until the June 25th meeting here. That looks like the first time we're going to cut rates this year. That's where it pivots to with the majority of people expecting 45.2%. There's also a 15.5% chance that we're going to cut in May as well. But most people don't think that we're going to cut next meeting in March. Most people are just not expecting a cut next meeting. So pretty probable that we're going to pause rates for a period of time, until, May, June is what it looks like. When do you guys think we'll cut rates? Looking at our poll numbers, we asked people, what does the market fear more? 49% think economic weakness, 51% think inflation. What do you guys think? What does the market fear more? Do you guys think we react positively or negatively to this number? I would wait until non-farm payrolls are out for sure. Personally, I would just wait. Again, today we had Canopy Growth Company, a cannabis stock. They posted worse EPS, missed by a much larger margin. Revenue beat, though. We also had nothing else really big. SIBO missed EPS, beat revenue. All right, guys, here we go. 13 minutes. Negative reaction, inflation. 4.1% unemployment. Nobody's cutting. They would do once the market plumps, maybe. These reports can change the expectations. It depends on the gravity of it, though. Like, it depends on how much worse or better the report is. It depends on if it's like really good or really bad. If it's somewhere in the middle, numbers are probably the expectations are probably going to be about the same. But yeah, that's what this is. So it really just depends on what we're looking like there, Again, remember, this is a big report, guys. Yeah, we'll have thousands here when the report actually drops. We'll see what this looks like. Again, Super Micro pushing up a little bit. We got ELF down there still. Bouncing up a little bit, though. AMD still under 110s. Still seeing weakness from their earnings report. NVIDIA's popping up, though. NVIDIA almost back up to 130s. Tesla's still at 370s here. Google's still at 190s with a small pullback after earnings. Yeah, let's see this. All right, guys. 11 minutes here, chat. 11 minutes. Will the NASDAQ drop with more job vacancies? Potentially. What numbers will cause the market to go down? I think much higher payrolls will make the market tank. But again, it's up in the air. Nothing's definitive. We never freaking know. We can only speculate and guess on this report. I think something that shows high payroll numbers is going to make the market panic and freak out. And so I think in that regard, that's going to make the market drop. Something that shows low payroll numbers could make the market go up. It depends on how weak. I think like really weak will still make the market panic as well. I think we're in kind of a fragile market. But again, what do I know? I might be wildly wrong about anything and everything I say. Do not copy me. I'm not an investment professional. I'm not liable if you lose. Always make your own assessment. Trade responsibly, chat. Nobody knows. Nothing's definitive. Nothing's guaranteed. We just kind of have to wait and see what happens. Yeah, well, you're being annoying right now because we're covering payrolls beta, so please stop posting it over and over again. It's all love, but yeah, we're covering payrolls right now, dude. We'll look at Amazon later. Yeah, nobody really knows, right? We can only speculate. Hey, good luck, Ireland. I'm tracking 520, 530 basically, resistance on the Q. Bitcoin swing trade, maybe. I don't know. I'm not taking a big position from payrolls. Like, I might see what payrolls do and then follow and gauge the reaction from it. And I'm going to put the NQ up here as well. So let's watch the NQ, and we'll put that up as well. But again, I might look at the payroll report and gauge the reaction. But I don't want to fall into the trap of like taking some huge monstrous position ahead of this report and then the volatility just destroying my account. That's not really what I'm interested in doing. I would much rather, you know, wait and chill and see what we get here. I'll put two charts up. We got the NASDAQ on the left, the NASDAQ 100. We got gold up on the right, and then we'll put the SPY up on the right as well here. Maybe, yeah, we'll see what happens. Market will be red today and next week. Yeah, it's all good, beta guy. Again, it's all good, dude. Just, I'm covering payrolls right now. I'll do it later. Just don't spam something over and over again. We'll talk about Amazon, but it's going to be later, after this report's over. This is kind of the big report. We'll have thousands here for the report at 8:30, so that's what we're going to cover right now, sir. Yeah, we watched the Dow, too. We'll watch a little bit of all of it. Look at the NASDAQ coming back down a little bit, though, today. So the NASDAQ is falling ahead of this report. It's falling ahead of this report. We still got over 7 minutes left. If it's anything like November, slightly higher unemployment's implication of longer-term Fed cuts are positive. Yeah, I mean, higher unemployment might signal more cuts. High inflation is going to signal less cuts. More payroll numbers are going to signal less cuts because it's going to mean a stronger economy. What does higher than expected NFP means? It means jobs came in much stronger than expected. It signals economic growth. But the market, again, fears too much economic growth because of inflation. More inflation happens after strong, like too strong of economic growth. Look at the NASDAQ dip here, chat. NASDAQ's down. Look at the SPY drop here, too. We're at 606s here. Gold's at 2880s. All right, chat. 7 minutes. Hey, thank you. You got 1700 here, guys. How about Tesla? Where's Tesla at? Look at the NASDAQ dip ahead of this report, though. Tesla all the way down to almost 370. 372s right now for Tesla. Google dipping down a little bit. ELF is down big still. Again, look at the NASDAQ fall. Look at gold. Gold's dipping down in anticipation with it. Do you think these are higher or lower numbers getting baked into this report? 6 minutes, chat. 6 minutes. Hit the live button next to the play button as well. Make sure you're fully caught up on stream. Chat, we appreciate it. NASDAQ down. I don't know what the reason is. There might be something showing up ahead of time. Question will be, will this be pushing down and try to get cheaper contracts for a rip up on the data release? Maybe. That's possible. What do you think the market would... What do you guys think payroll numbers will come in at to make the market react positively? Well, higher numbers for payrolls, it depends on how high. I think something like shockingly high is going to make the market panic. I think something that is slightly high is going to cause... I'm not sure what that's going to do. I think something that's like shockingly low might make the market panic as well, or it could make the market go up. Baba. So Justin, he's talking about futures contracts, not options contracts, brother. All right, we got about 2,000 people here. We still got 5 minutes left. Yeah, give me your last minute picks. 5% near expected would be okay. Yeah. Pre-report dump. Yeah, maybe people are getting baked into potential outcomes. So the president's going to do an interview on Sunday at 3 p.m. Eastern Standard Time before the Super Bowl. Yeah, all good, Justin. There's no worries, man. All right, look at the NASDAQ still cracking lows, breaking down. Look at the SPY dropping ahead of the NFP report here, chat. Again, 4 minutes left. About exactly 4 minutes left. Let's do this. It's Friday. We ain't got no job, and all we have to do is sit here and watch payroll numbers today, team. Just to clarify, it's a joke from Friday, the movie. I do have a job. I pay lots of taxes. Just to clarify. But great movie nonetheless. We also have Bowman speaking later on today. Unemployment expected at 4.1%. Private payrolls expected at 141,000. Non-farm payrolls expected at about 165 to 170K. We also have average hourly earnings month over month dropping. Expected at 0.3%. Here's a rebound back up ahead of the report here. We still got 3.5 minutes left. Yeah. I got the reference. Some people aren't, and they're going to be like, this dude doesn't have a job. You know? Well, that's as expected, Gaurav. The market is scared. I think the market's scared of inflation. All right, chat. Hey, we got 3 minutes left. My play is to wait for the numbers to come out and then react to it in one way or another. Top 3 dudes with no job ever in the world. I don't even know what a job is, bro. What is a job, dude? 50-50 on your poll. Yeah, 51% think the market fears inflation. 49% think they fear economic weakness. Yeah. We got almost 2,500 here. 2 minutes left. The market will kick your butt. Yeah, for sure. If I try to buy ahead of the payroll numbers, it definitely will. All right, guys, let's get ready. We are ready here. We got our numbers up. 3 minutes. 2 minutes, really. 2 minutes. Even chat is 50-50 split. Yeah, I got a job. I pay hundreds and thousands in taxes, dude. My taxes last year are going to be over 100K. So, definitely have a job. All right, here we go. Yeah, where's Craig at? Build your own AI. All right, we got 2,500 people here. We got a minute and a half left. I would get a drum roll. I wish I had a drum roll. I need to get a soundboard up here and running. Yeah, I hate taxes. But you got to pay them. You know. All right, guys. We're at 844 on the NASDAQ. SPY at 605.80s. Gold at 28.80s here. We got 1 minute left, chat. 1 minute. Definitely top 3 ever. Inflation makes Bitcoin worse. Hey, what's up, Raymond? All right, guys, we got 40 minutes left. Timer's right on. Yeah, 30 seconds, guys. 30 seconds. Timer's a little bit early, but that's okay. 30 seconds left. Look at this support and resistance level test here. Here we go, guys. Here we go. Payroll data coming soon, chat. Coming soon. You guys ready? I'm gonna pause this timer. We really have about 15 seconds left. Hit the live button next to the play button. Make sure you're fully caught up on stream. 15 seconds left. 10 seconds left. Hit the live button next to the play button. Here we go, guys. Here we go. Here's the payroll report. 5, 4, 3, 2, 1, and here we go. Waiting for payrolls. Payroll numbers showed up at 143, lower than expected. 143, lower than expected. Market is reacting positively. 143K versus 165 to 170K expected. Lower than expected payrolls. Unemployment rate showed up lower than expected as well at 4%. I would think this is good, but the market's reacting kind of flat from it. It hasn't really moved. It originally popped up. Now it's coming back down. Gold is going up a little bit. But again, 143 lower than expected versus 169 expected, guys. 143 versus 169 to 170 expected. Let's get ready for people to act like it's recession time. Of course it's not, but I'm sure people are going to act like that. We got 3,200 viewers in the chat. Market is down on this report. Down so far. Doesn't mean anything. Sometimes the first move is the wrong move. Average hourly earnings showed up at 0.5%, 4.1% year over year. Private payrolls showed up at, where'd they go? A 111, lower than expected private payrolls as well versus 141 expected. Unemployment showed up at 4%, 4.1% expected, lower than expected there. And so kind of mixed numbers, but non-farm payrolls 143 versus 170K expected here, chat. This seems like a positive report to me. I think this is a report that might make the market go up. I'm honestly pretty bullish. I'm not telling you what to do. I have no idea what's going to freaking happen here. But to be honest, this seems like a pretty bullish report to me personally, and I might be wildly wrong. Maybe the market goes down. Not an investment professional. I'm not liable if you lose money. But I might take like a rare trade here, guys. I might take like a rare micro NASDAQ trade here, buy in this dip with a small one contract piece here. So we're going to jump in one contracts here, and I'm just going to leave this, to be honest. It's a tiny trade, but I honestly am bullish on this. We'll see what happens. It's a tiny trade. Don't copy me. I have no freaking idea what I'm doing here. But again, data came in. I'm going to put these numbers up on screen. I'll put these numbers up on screen. I got too many windows up here. But I'll put this up on screen. Don't copy me. Again, this is a gamble, basically, for me. And it's a tiny trade. Unemployment, 4% versus 4.1% expected. All right, so here's the data right here. We'll put this up on screen now, too. Still a little early. Sometimes the first move is the wrong move, so we're just going to sit tight and wait. There's the data right there. So far, we're down here. But I'm going to let it ride, I think, too. I'm going to use this level here as a risk. Right around 800s. We'll let it test. Small little trade. Do you guys think we rebound now here, chat? Yeah, we're only down like 40 or 50 bucks here, so. And I like the trade too, but the volatility that we get might make it not worth it. But I do like the trade. And we got some room, to be honest. Yesterday we made hundreds on this account, so we got some room. Also, guys, this is on Top Step. So Top Step gives you a demo. They test your skill with a demo account in futures. It's very similar to day trading stocks. You can see how similar it is. No PDT rule in futures. I can day trade the QQ price action, the S&P price action, and the S&P and the NASDAQ 100. No PDT rule. Top Step gives you a demo. Test your skill with a demo account first. If you pass the test, they fund you between 50K up to 150K. The base one, you only got to make 3K in profit without losing 2K first, following their rules and conditions. If you fail, you lose 49 bucks. It's not the end of the world. It comes with real-time data as well, and if you were going to pay for a demo account with real-time data, it's going to cost about the same. Get you around the PDT rule, and it's just a great way to learn how to day trade versus funding your own account 5, 10, 20, 30 grand and losing that. And most day traders lose. I think that's the same here, but frankly, it's a lot cheap. It's a lot cheaper than losing 10, 20, 30 grand funding your own account most of the time. There's no PDT in futures. Most pro day traders trade futures. And Top Step, if you use Top Step X, the platform I'm using, there's no commission. So I can take these tiny little trades, no commission, tiny amount of fees per trade. And Top Step has paid out almost 200 million. They've been around since they've been around for like 12 years. But again, they're an affiliate of mine. I am biased because I get paid by them. Confirm everything with them. I can't guarantee anything. I'm not an investment professional. Understand CFTC 4.41, and I have no freaking idea what I'm talking about. I can't guarantee anything, and I'm not liable if you lose money, guys. Always make your own assessment. Trade responsibly. Sometimes I trade off stream and lose off stream. I have no freaking idea what I'm talking about. But the market is up a little bit, guys. The market's up. We'll see if it continues. Again, I think it's kind of bullish report personally. I think low unemployment and weaker payroll numbers is that sweet Goldilocks spot. But maybe I'm wrong, and it doesn't freaking mean anything, and nothing's definitive in markets, chat. But if you want to check out Top Step, there's the link in chat. You can also find the link in the description as well. Stick around. We're going to keep trading. We might add to some of this here, chat, so stick around. I'm going to add some here, kind of see if I can fix my average. There we go. We're going to take half off there, just lock in some profit. Protect the trade. Now we got a little cushion on the trade, and we can maybe add more, figure out what we want to do. And it doesn't matter as much. What do you guys think, guys? Let me end this poll, and we're going to do another poll, and we're going to ask, are you bullish or bearish on this report? On today's lower NFP and unemployment reports. Bull, bear. Basically, do you think we bounce back on this report or go down? What do you guys think? Are you bullish or bearish on this report? 9 a.m. rip, bullish, bullerish. Let it ride. Oh man, I turned the other way and we are down here, chat. Again, I want to just sit in this. This is one of those trades where I'm kind of bullish long term. And I think the volatility is there. But again, unemployment showed up at 4% versus 4.1%. We're kind of flat on this report now. We took some profit. Payrolls came in lower than expected at 143. And I think that's an optimistic thing. So maybe we can add to this and take some more risk. I don't usually trade in pre-market, but I think now is a little bit more justifiable. We'll go ahead and add to it. Two contracts now. See if we bounce at my level here and keep going up. Question is, how long does it consolidate here? Gold's shooting up too. Let's see what the rest of the market is. Amazon. I want to give it to where we can always come back and regroup. And so Amazon's down a little bit from this report. Q is down some too, still dropping. There he goes, it's back up. Let's see if a Q continues to rip up here. NASDAQ pop it up. There we go, we're back green on this one now. There we go. I'm gonna go ahead and take a little bit more off there, just lock in some more here. Add a little bit more here. See if we keep bouncing. Take a little bit more off there, lock it in. So we got a nice little cushion on the day. We're up about 50 bucks on this. We might add some more here, find a good add spot if we keep retracing back down. Let's try to add right there. We'll try to add right there, see if we retrace back up, pop back up. Hit the subscribe button, guys. Hit the notification bell. Pawn hit me with the slap. I'm not supposed to trade in pre-market. It is kind of breaking my rules. But I kind of like this. Here, we're going to cut half there. There we go. Cut a little bit more there. Green again. Add a little bit more to this. Take that off. Cut it. All right, so we're out of the trade. We might add some back. I'm still bullish. We ended up making like 60 or 70 bucks in pre-market. I'm trading small because, you know, I don't really know what we're going to get in pre-market. And it's kind of against my rules to trade in pre-market. But with the NFP report, we're going to trade it today. So don't get mad. Yeah, we're going to put you in timeout. Yeah, it was a good trade. I think it makes sense. The logic of it made sense. Like me saying, hey, I think this payroll report was like, okay, I think we're going to push up a little bit afterwards was absolutely right. The logic of it was sound. I think it'll probably keep pushing up too, but who freaking knows, man? Everything's somewhat of a gamble in markets. Like nothing's definitive. There's always variance. And so like the people yelling stop gambling are usually generally people that don't really understand what they're talking about. And they're kind of butthurt about their own situation usually. Like the people that are the loudest in chat are generally like the weakest like traders. a lot of the time the biggest haters are people who have tried to be YouTubers and failed, and so when they see anybody get thousands of views on YouTube, they kind of get mad about it. That's the reality of it. And look, here's the push up. Did I not call this exact move, chat? Did I not call this literal exact move here? Look at this. We called this to a T. And so again, if you want to follow somebody that actually knows what they're talking about, subscribe. You know, very predictable, very predictable. And again, anybody that told you guys that the market would react negatively to this payroll report being lower than expected and unemployment being low, not really the most knowledgeable. They don't really understand economic, trends, to be honest, because this is very predictable. It doesn't mean anything yet, but again, first move can be the wrong move, and this is just very predictable. So I hope you guys understand the logic that I used to accurately predict this. Even if I didn't make money, it doesn't matter how much I make. It's confidence building to see this type of reaction and to call it right there. And, it makes sense. Yeah, but remember, guys, I have no freaking idea what I'm talking about. I might be wildly wrong about anything and everything I say. Payrolls were worse than expected, lower than expected, but that's a good thing right now. If you want to know why the market reacted positively to this report, the market reacted positively because the market fears inflation, and a lower payroll report signals less inflation problems and potentially earlier cuts than originally expected, and the market wants rate cuts. Unemployment was also lower than expected, adding a little bit more optimism towards that as well, right? But unemployment being essentially flat, again, it's just predictable. The original reaction is predictable. Now, the market can do anything moving forward, but I told you guys before, way before the payroll numbers came out, I told you guys that the market would probably react. I told you guys this. I said if the payroll numbers come in slightly lower than expected, as they did, the market would probably like it, right? And that's exactly what we got. Payroll numbers came in slightly lower than expected. The market liked it. The market ended up going up from this report. And it doesn't mean anything yet. The market could obviously still turn and go the other way. And I'm not bragging. I'm trying to teach you guys how you're able to gauge the economy in that way, because it all has to do with what people fear. It all has to do with what people fear. If the market fears inflation, they don't really want super strong payroll numbers, right? Like that might make them panic because inflation might get worse with super high payroll numbers. If the market fears recessions and depressions and stuff like that, that's the situation where lower payrolls like today might make the market freak out. So it all has to do with what the market fears in the economy. Hey, thank you, MC. I appreciate it, brother. What did Bitcoin end up doing? Yeah, a lot of people talking about Bitcoin. Bitcoin ended up shooting up on this report as well, up to 99K. Again, probably because more people can afford it with lower inflation, but who knows? Yeah, so again, we're looking at the unemployment rate and payroll data. Yeah, I mean, I think you guys are confusing payrolls and unemployment. Unemployment is obviously how many people are not employed, right? Payroll numbers are business expansion through job growth. So they're a little bit different. It's not the same thing. We can have low in both ends and it still can make sense. Yeah, I mean, I don't really trade in pre-market Percy, and so whether I made money is irrelevant. It's not about whether I made money, it's about whether you can accurately gauge. I'm trying to teach people here, and so they can understand economics. And so it doesn't matter how much I make. If anything, I'm really trying not to trade in pre-market. It kind of breaks the rules that I've been in, that have given me really good accuracy. I made hundreds yesterday, and today if I'm up $60 to start the day, who cares? Like it's good and all. But what most of this shows, regardless of trading, is economic future outlook, right? Like what does the market fear? What does the market want? What does the market not want? How will the market react to future economic data, like so forth and so on. It doesn't have much to do with trading. In all honesty, it has to do with economic outlook. And I think this shows that the market still fears inflation, and to a point in which a negative payroll report makes the market react positively. Markets are down, I'm sure. Don't you agree? I think it's too early. I think the market could react like this to payroll data and then do anything for the rest of the day. It's Friday. We ain't got no job. We ain't got ish to do. But no, it's Friday. The market can be sideways. The market can do a lot of different things. And so the original reaction was positive. Here's the 200 exponential. I think this is a really good spot right here to try to gauge what happens. A lot of the time the market will bounce at the 200 EMA. I also see a support level at 850. And so we'll see what we get here. But yeah, I think a lot of the time the market bounces at the 200 exponential, and it's kind of a good like milestone level that you might want to pay attention to. Right now, so like right now, guys, if we look at the Fed expectational numbers here, in terms of rate decisions, the rate decision is still expected at almost 90% for another pause in March. So right now it's still another pause in March, but we got a lot of stuff to look at between now and then. Like these percentages are subject to change. And the reason they're subject to change is because we have economic data that's coming out between now and then. The next meeting, these meetings happen every 6 weeks. And so, we still have, the last one came out about a week and a half ago. So we still have essentially like a month plus to see these outlook, expectations change for rate decisions in March. Now, the only way we're going to see anything outside of a pause in March to be completely real is if we see deep economic weakness from now to then. Meaning like next month payrolls are weak too, unemployment's high, GDP is weak, stuff like that. Like that might make the market more fearful of economic weakness, and in that regard, the Federal Reserve might pivot to a more dovish like stance on rates. But nobody freaking knows. It's definitely not definitive. And again, if you hear anybody act like they know for sure which way the market's going, which way the market might head, which way the economy's heading, they're usually newer. Experienced people understand variance, and nobody freaking knows. And so we just got to wait to see what kind of economic data comes out between now and the next Fed decision. February's data is going to be really important because the next meeting is in March. And so like what happens this month for PCE inflation, GDP data, all that stuff comes out this month. What we see for PCE, GDP between now and then is really, really relevant. So but remember, guys, I have no freaking idea what I'm talking about. I might be wildly wrong about anything and everything I say. Like, I don't even claim to be a good trader or anything like that because, again, I would rather just give people a free resource where you can watch economic data come out. You can watch economy data come out. You can watch market movement. So, again, guys, remember, the level we talked about was 850. Look at that. We tapped right off of that level. And again, if you want to check out TopStep's a funded account program. Again, I don't even claim to be a good trader. My channel is mostly based around economics and market trends. But if you want to help support the channel, check out TopStep. There's no PDT rule in futures. You can day trade the S&P, the NASDAQ, the Dow, the Russell, gold. Very similar to day trading stocks, to be honest. Patterns are very similar. Most pro day traders actually trade futures because there's no PDT rule. And on TopStep, there's zero commission on TopStep X. And they use like trading view charts. This is TopStep X right here. And so with micros, you can basically take smaller size and kind of scalp and do some cool stuff. And again, TopStep has paid out almost $200 million since 2020. They fund thousands and thousands of traders. They pay out millions in actual withdrawals, fund thousands of traders. They're the most legit one in the world. They got some of the best rules in the game, and it's a great way to learn day trading. Most day traders lose. I think what causes some people in chat is like people sell people courses, they sell people mentorships, they tell people how great they are in trading, but they have to embellish because they're telling people how great they are, right? And so they act like they're the greatest and they end up embellishing their trades. I would rather just tell people, hey, I don't claim to be anything, and give people kind of a relaxed stream where it doesn't matter what happens. We can just kind of sit around and BS and hang out. And if you want to check it out, here's the link. If you want to check out Top Step Trade with me, again, they're an affiliate of mine. They pay me money. I am biased because of it. Understand all these rules. Market's still kind of middle road. We're still up from the payroll report, at least right now. But market's kind of chopping back and forth. We'll see if we get like a good dip buy to get involved with. But if you want to check them out, here's the link. There's the link right there. Yeah, there's a little rebound back up here. Let's see what else we got. We'll see what happens here. We got a big, strong rebound back up now. There's a pop. See if the market pops back up, guys. We froze it? There we go. Drop it down a little bit here. See if the market retraces back up or down now. I'm kind of interested in buying this little dip. We'll see if we get it or not. If we can get like a little support buy down here, I'm going to add one, and we might add a couple. Just such a strong move already here, man. I wanted a little bit less of a move so I could add some size, but that's all right. Add a little bit more. Take a little bit more off towards the top of that range here, I guess. But we're just kind of scalping little size here. We'll get out there now. All right, let me catch back up with the chat. Your work and availability is much appreciated by me. Just saying thanks, bro. Thank you, Daryl. I appreciate it, brother. Appreciate the love, man. And again, guys, listen, the people that you see, like, I see some people that are just toxic on YouTube. I've even seen some other streamers be like, hey, I got to sit out because people are just so, like, weird and critical of everybody. But just know, like, the people sitting around, like, talking smack to everybody in the chat, they're usually just unhappy people that are just kind of struggling with their own sense of self-worth. And so, like, the saying misery loves company is absolutely true because, like, people that are miserable want to make everybody else miserable. So they just kind of sit around attacking and criticizing. Usually it also signals, like, that they're a little bit more rookie traders. Like, experienced traders don't sit around looking to attack other traders. Like, it's just not something they do. They're too busy doing their own thing. And so, you know, don't get too thrown off by them. When I dip, you dip, she dips. Yeah, so again, we're bouncing right around that 200 exponential so far. I'm still bullish on this report. I do think we're bullish on this report. Yeah. So real estate programming, Steven. Software development, programming, and real estate. Bond yields are up. I think that was the high wage growth. Bond yields are up because, okay, so to understand why bond yields are up, right? You even see like the current administration say that they're going to hyper focus on bond yields. And I don't know if I necessarily agree with that, but bond yields are probably up, or bond yields are up because it was a more dovish economic report by the Fed. What do we mean by more dovish? Hey, dude, how you doing, man? Hey, I love you, buddy. Have a good day at school, dude. Have a great day, man. Love you, dude. All right, guys. So, bond yields are up because interest rates are more predicted to go down. Why are interest rates more predicted to go down? Because the economic report was weaker than expected. With weaker economics, what does that mean? A potentially more dovish Fed. What does that mean? Higher yields, because interest rates and yields follow each other. And so if we have weak economic data, yields are going to go up, or because interest rates are more likely to go, or yields are going to go down. Or wait, no, actually, I'm sorry. Yields are up right now. What am I talking about? I have no idea what I'm talking about. Yields are up, which means that the Fed's more likely to be hawkish, which is kind of nonsensical to me based off of weaker economic data. But sometimes the market doesn't make sense. Why do y'all think yields are up, actually? Let me go back to this. Yeah, I'm wrong here. Why are yields up whenever economic data was weaker than expected? If economic data is weaker than expected, it would make more sense that the Fed's going to be more dovish and bring interest rates down to stimulate the economy from the economic weakness versus higher interest rates, which would higher interest rates makes yields spike, not lower. So it's very strange yields are spiking up on this report. But who knows, man? Yeah. Bond traders could be afraid of inflation, but I don't understand how a lower payroll report's going to signal that. Yeah, average hourly wages are up. That might signal more inflation potential in a hawkish Fed, and in that regard, yields might be spiking. That's true. That might be the correlation there. That's true. That might be what it is. Do you feel like life is perfect? Then you may think it's skill and smarts. However, most successful people get lucky. Some work too hard and sacrifice a lot. I'm not successful, friends telling me. I don't think my life is perfect by any means. Like, we got problems just like everybody else. I have a beautiful life, though, a very fulfilling life, and I'm genuinely pretty happy with my life. You know, I make a good bit of money. Like, I've got a beautiful family. Like, got a good wife and kids. Live in a nice place. Like, do things that I enjoy. You know, I'm genuinely happy. And so, but I don't know if some of it was certainly luck, but you also got to put the work in too. I think people who might not be successful blame a lot of it on luck or whatever. And you know, sometimes it certainly is luck, right? But I think it also takes hard work. And I think, you know, most people don't have the discipline to put the work in now to live good in 5 years. But that's what it takes. That's the lag behind it. Like, you put a lot of work in now, you live great in 5 years, right? Like, that's the way. Most people, they need instant gratification, and they're just not able to put that type of work in and consistently do it, like, without fail for an extended period of time. You know, that's what I think. But again, but there's always a little bit of luck involved for sure. But I think smart people understand. I'll put it this way, right? Successful people, some of it's luck. But only 1 out of 6 businesses succeed, right? But that's actually a pretty good margin, I would say, right? Because essentially it looks like this. If most businesses fail and only 1 out of 6 businesses succeed, what does that mean? That means you got to keep starting businesses. And you know, once you start starting businesses, as long as you're planning it right and starting good businesses, eventually one's going to stick, and that can pay you for the rest of your life. Right? You just got to be okay with the failure. Most people try to start a business and they fail and they give up and they're like, oh, that's it. I think you got to just keep on chucking away at it. You got to keep on pushing. And eventually one's going to stick if you keep doing it right. And I think that's an optimistic way to look at it, not pessimistic like a lot of people make it seem. Anyways. All right, guys. Hey, 30 minutes left until the market opens. 30 minutes. Well, they expected a higher payroll than they showed Big T. They expected 170. They showed 143. So I think the more logical conclusion is that average hourly earnings were up. They expected 0.3. They showed 0.5%. And so they were higher than expected. That might signal inflation fears causing the yield to spike. But the market's still pretty optimistic on lower than expected jobs numbers as well as lower than expected unemployment. It's kind of the best of both worlds. Payroll numbers were lower, signaling potentially less inflation problems, but also unemployment was still low, signaling less economic weakness. This is what I was trying to tell people about stagflation earlier, right? Like stagflation means high inflation and weak economy. And so we'll see if we get anywhere close to that. But yeah, you just got to put the work in, man. It takes time. And the easiest way to do it, I don't want to seem like a broken record. I'm not even claiming to be some super good business person or anything. Monetize what you're interested in. Whatever you're interested in, monetize the heck out of that. That's what you do. You monetize what you're passionate about. And that'll give you the motivation and the endurance, really, to keep on pushing. Because if you try to monetize something that you're not super interested in, and sometimes you can start a business and that makes you interested in whatever the underlying business is. But find stuff you genuinely like doing and monetize that somehow. All right, guys, payroll numbers out. Yeah. So again, guys, the U.S. Bureau released the January employment situation report today. Job growth added 143,000 NFP jobs in January, falling short of the anticipated 170. It marks a decline from December's revised gain of 307. The unemployment rate also hedged down to 4% versus 4.1% expected, indicating slight improvement in labor conditions. Wage growth, average hourly earnings increased 0.5% in January, bringing year-over-year wage growth to 3.9%, suggests sustained wage pressure, which could influence future monetary policy decisions, right? And so this is why the yields, I think, are up. And somebody else mentioned this as well. So you can kind of see the numbers in chat right there. Yeah, failing teaches you stuff. 100% it does. Yeah, so I mean, the Fed does control the short end of the yield curve, not the long end. The federal funds rate, which Fed directly set, impacts short-term treasury yields such as like 3-month and 2-year yields primarily. When the Fed raises or cut, it directly affects borrowing costs for banks and institutions, which in turn influence like shorter-term bonds like 3-month treasuries, 2-year, 5-year treasuries to some extent. The Fed does not directly control 10-year, 30-year yields. Instead, these longer-term rates are determined by supply-demand. Economic growth, inflation, stuff like that. So maybe looking at the 10-year yield's the wrong one to look at in terms of gauging this. Yeah, investors demand higher yields to compensate for inflation risks is what this is. The Fed delays rate cuts longer end yields rise to price and higher for longer rates. Yeah. All right, so market's still holding. I'm still watching this 866 level for sure. Yeah, so it's not the job report that the bond yield is reacting to. Its movement is dictated by market movement. I mean, not exactly. Like bond yields and stocks can move together or like opposing each other. Like investors do move money like in and out of bonds into stocks and stuff like that if risk is on. Higher yields does signal economic growth, which is typically good for stocks, but it's not exactly. Yeah, I mean, the federal funds rate directly influences like home equity lines of credit, adjustable rate mortgages, short-term loans. Coffee? No, I haven't been watching coffee like that. All right, guys, let's get ready. All right, guys. So again, NFP data is out. Again, we're going to be day trading live. We will see. Home loans are pegged to the 10-year. Hey, bro, I'm dumb. Should I buy or sell? I have no freaking idea, dude. They can take profits on Friday too to avoid. Like the reason they might take profits on Friday it depends on how long they hold. Brit. So Brit says, is it true traders generally take profits on Friday, making prices go down? It can be, right? And you got to understand like the mass psychology of everything. Like, think about it like this, right? Think about it like this. Especially recently, big economic, fundamental, and finance news can happen over the weekend, right? If big news happens over the weekend, it can influence shorter-term positions. So, like, if I buy the SPY 2 days ago and I'm holding the SPY, and I understand good or bad news can happen over the weekend that gives me a little bit too much variance and volatility for me to be comfortable with in my shorter term trades, what am I going to do? I'm going to sell before the weekend, because I know if we do have big bad news come out over the weekend on Monday, before I could even sell, the market might be gapping down so much that it destroys any positions that I'm in. And so the mass effect of that type of psychology can give more red action to happen leading up to the weekend, but it's never for sure. A lot of the time we get choppiness as well, right? There's variance. It could be either way, to be honest. It's never 100%, but I would say it's definitely a little bit more bearish heading into the weekend than bullish, but it varies. Who's looking rough with injuries? Oh, Tua. Yeah, dude. Honestly, Tua's always been fragile. I'm a big supporter of Tua. He seems like a genuinely good dude, comes from a genuinely good family. I want to see him succeed. I really, really do. Again, I'm a Joe Burrow fan, and so, like, I was rooting for Joe Burrow and LSU absolutely in 2019. But Tua genuinely seemed like a good dude. I hated to see him get hurt, even though it helped us win the national championship. But, like, he seems like a genuinely good dude. And so, but he's just fragile. He gets hurt a lot. It's hard for, it's hard to be optimistic when he gets hurt so much. And you got to question whether his time at Alabama affected that or not, He's not a terrible QB. He's just not consistent because of his injuries, I would say. He's a great quarterback, 100%. He just kind of gave it all in college, and now he's fragile. Yeah, for sure, but I would say it's a bigger effect than traders closing end of day. It's the same idea, absolutely, Naomi, but maybe a little bit more volume of it. Yeah, he'll be fine. He's richer than me for sure. Yeah. And what, Don? Yeah, options expire Friday, 100%. Yeah, options expire. Absolutely a thing. Oh, Naomi runs a Dolphins-based football channel. Hey, that's cool. I'm a big Reggie Bush fan, you know. I remember when y'all had him. I'm an LSU fan by nature, though, and I'm a Saints fan, although the Saints need to do something. I'm not really happy with them lately. But I root for Tua. I root for Burrow. I root for the Bengals. I root for the Saints. I even root for Jalen Hurts and the Eagles. I want to see Jalen win. Honestly, anybody that was involved with LSU's playoff run in 2019, the opposing teams, we had Jalen Hurts. You had, who was the other guy? They had a couple ones. You had Burrow, of course. You had Sunshine. What's his name? Trevor Lawrence. I'm rooting for all of them. You know, I hope they all kill it and do well. Yeah. Yeah, all good, Naomi. I appreciate that. All right, guys, we got 15 minutes. Yeah, Giants fans, they've been crying for years. You know, I can't say I'm optimistic on them either, to be honest. Hey, we broke 155K. Thanks so much. I appreciate the love. My levels have been holding on the NASDAQ, too. Bro, people get so mad, dude. It's like if I tell people right here that I think this is a good buy and the market ends up ripping up, it's like they get so upset that I was right. It's kind of funny. Like, you got to love to see it. People are so upset. And again, I'm going to brag about this until my heart's content. Y'all will never hear the end of it. But I think if you can learn anything from me being the top 3 worst trader ever here, like, you can create ideas like this. This is how you formulate a thesis in markets. You can say, hey, these numbers were pretty good. The market, seems to react positively to something like this, and now it reacted negatively. We see this a lot with, like, earnings. Earnings, I do this all the time, right? Earnings, somebody thanks me, even though I don't really want anybody to copy me. But what was it? Meta, I think, had great earnings and reacted negatively to it. And I think right after the earnings report, when Meta dropped down to like 680s, I was like, hey, this looks like a pretty cheap buy. And then it ended up ripping back up. It's almost to 720s now. And somebody was like, hey, thank you. I bought that dip. And so it's the same logic of that type of trade where, data comes in what I consider good, market negatively reacts short term to it, right? And that gives you a moment of opportunity. Now, the variance is going to be there still. Like, it could always go the other way, but 3, 4, 5, 6 times out of 10, 7 times out of 10, 8 times out of 10, it can work, right? I'm not saying it does. Always make your own assessment, trade responsibly. I can't guarantee anything, but I think coming up with like thesis and ideas like that makes a lot of sense. And I think that's where professional traders make their money. And I'm not even claiming to be a professional trader. I'm not even claiming to be a good trader, but I think that's how they do it. And that's where they find those ideas. And usually the people that are like the most upset about it, like you see like some people in chat just trip out. They get so upset. They're ones that are betting short right here, right? Like, they're ones that are jumping in short. And so now when we rebound up, they're big mad, and so just understand where it all comes from. It's important to understand the logic. Freaking cricket, rugby. There's so many rules. Don't copy my trades, Joker. Don't do it. I made 1,000 thanks to your advice. That is not your advice. What is advice? I don't even know what advice is. Drew Brees, yeah. He loves Bitcoin. Gotta love Drew, the GOAT. Maybe not the GOAT, but he's one of them. Yeah, there's money-making levels for futures for sure. And again, we got a video that we did last week talking about how we document the levels. If you notice the levels I draw here, like look, this one, boom, this one, boom, this one, boom, this one, boom, this level here. And so if you look at the levels that I draw, they've been pretty confirmed, to be completely honest here. And we have a video documenting how we do this. And again, I can't guarantee anything. There's the video right there, the levels video, if you want to check out the YouTube. Pretty sure his advice is to not do anything I say or do. Absolutely it is. Yeah, we're talking about American football. Pawn, you and me are going to have to go to a Bengals game one day, brother. We're going to have to go to a Bengals game one day, dude. What do you think for gold? How did gold react to all this? I know yield spiked. Gold's now coming back up. It's kind of flat from the report, but bro, what makes people prefer many assets opposed to the normal US 100 and S&P 100? Genuine question, Gumbo. And answer this before you look it up on the internet. Can you buy the S&P 500 directly? Can you buy the NASDAQ 100 directly? This is a teaching moment for everybody at home. Can you buy the S&P 500 directly? The reality is, the answer is no. You can't. You can't buy the S&P 500 directly. If I wanted to buy the SPX here, I can't. It won't let me. I can't buy it. If I want to buy the NASDAQ 100, the INDX directly, I can't buy it. These are indices. You can't buy indices directly. If I want to buy the Dow Jones, I can't buy it. These are indices. I can't do it. I can't buy it. So again, you can buy things like the SPY and Q, which are ETFs based around these things. But again, to put it into perspective, the SPY tracks the E-mini futures contract. So the SPY tracks the S&P 500 futures contract. The NASDAQ is what influences the the NASDAQ 100 NQ futures contract is what makes the QQQ move. The QQQ follows the NQ. And so, yeah, you can't buy the indices directly. You can only buy ETFs or futures contracts based around the underlying indices. And it's all good. I'm trying to help them understand, right? Yeah, you could buy one of each stock on the index, sure, but you can't buy the index directly. Well, a lot of people are not going to consider this good news today, to be honest, based around the payroll data. Some people are not going to consider this good. I consider it good because, we had lower payrolls, more optimistic look regarding inflation, although wages were higher, and that kind of made the market panic too. So it's somewhere in the middle, as it usually is. But yeah, so here's my resistance level at 890 testing here, Chad. Look at this. And one thing I do when I find good levels, I leave them on my chart. That's how these levels are playing out. These are old levels that I drew. I didn't draw these today. These are still on my chart from the last while. I leave them on my chart because they work. And traders leave them on their charts as well, base their trades around them, and that's why they work. And it's all mass psychology, And again, if you want to see how I document these levels, watch the video. Go to my videos, watch the Ultimate Trading System on Top Step X using levels in the 200 exponential. Yeah. All right, guys, we still got 10 minutes left. Still got over 1,000 viewers here. Thanks so much, chat. All right. So Lolo, you could buy the ES future contract Lolo. So the symbol ES is the S&P 500 futures contract Lolo. You can't buy the S&P 500 directly, Lolo. So you can't buy the S&P 500 directly. You can't buy the NASDAQ 100 directly. Now you can buy ETFs based around them like the SPY and Q, or you can buy the futures contracts based around them like the ES or the NQ, right? The ES is the S&P 500. The NQ is the NASDAQ 100. The MNQ is the micro NASDAQ 100, which is a little bit less movement, but the same price and movement. And the MES is the micro S&P 500. So a little lower, smaller size, basically, if you want to day trade those. Yeah, you could have buy all 500 stocks. My sister bought the Vanguard Admiral S&P 500 ETF. Right, but that's not that's an ETF based around it, right? So that's like the SPY. Like if I look at the SPY, or I could put like the SPYX, you know, I could put up, like there's all these different variations of ETFs that you can buy based around the S&P 500. So you could buy an ETF based around it. But like if I put up the SPX, which is the actual S&P 500, I can't buy it. If I put up the NDX, which is the NASDAQ 100, I can't buy it. If I put up the Dow Jones, DJI, it won't let me put this up for some reason on a short-term chart, but yeah. Point is, you can't buy the index directly. You can buy ETFs based around it, or you can buy futures contracts based around it. Okay, that makes sense, Lolo. All right, guys, 8 minutes here. 8 minutes. My levels are holding so far, but I still gotta wait until the opening bell to really get my trades in. Again, guys, give me a follow on Twitter as well. We've been posting a daily news breakdown. So if you want to see what's going on in markets in an easy, understandable thing, follow me on Twitter. Here's the last one. Give your boy a follow on Twitter. Yeah, all good. Again, Super Micro moving up almost to 35s today. Meta up a little bit. Bitcoin broke 100K again. It's back to 100, right around 100K now. Part of me wants to buy this. We're just 7 minutes close to the open. All right, I'm going to do it. We'll take up to 4 contracts here. Just because I got such an easy risk level underneath me. Oof. What a drop. I'm going to cut that right now. Man, we ended up losing like $15, and so it's not the end of the world, but man, what a drop right before the open. Still green on the day though, but we'll wait. Yeah, we got Michigan consumer sentiment data. How can you determine if the market fears inflation? By the reaction to economic reports. Yeah. Honestly, my dip buy would have worked here too, is the thing. So, like, we just got scared out. But look at the bounce. We wanted to bounce off of 875, and we got one up to 885. So, it would have worked, but yeah, I should just follow my rules and wait for the opening bell. Yeah. All right. All right, guys. So market's bouncing at that same level we talked about, but I got to wait for the market to open in 2 minutes. All right, so and the Chat GPT, look at that bounce right at that spot too. Less than 2 minutes. All right, guys. So, yeah, so economy added 143K jobs under the 170 expected, down from December's revised 307. Unemployment rate went down to 4%. Cali wildfires, cold weather contribute to the slowdown. Amazon's cautious outlook weighs on markets. Amazon dropped. Strong quarterly numbers, bad AWS expectations and guidance. Treasury yields in the dollars reacted to this. The 10-year treasury rolled to 4.5%, 4.49%. Fed is expected to keep interest rate unchanged due to the robust labor market, persistent inflation. The Bureau of Labor Statistics revised employment data from 23 of April through March 24, revealing that job growth during this period was overestimated by approximately 598,000 jobs. Yeah. All right, look at this bounce here. Again, gold's still ripping up. Here's the opening bell, guys. 10 seconds. Let's do this. And here's the opening bell. Good luck, guys. Yeah, type about 100 words a minute. All right, there's the open. Let's see what the market gives us. Watching Amazon a little bit as well. Amazon has had a weak open, but we might bounce back on it too. I'm going to let 4 or 5 minutes pass at least before we start trading today, guys. All right, gotta wait a couple minutes left. Again, NASDAQ rebounded pretty quick. Whew. All right. All right, Google down a little bit, but the NASDAQ's popping up here. Amazon rebounding some, and it looks pretty strong. Netflix is piping up too, making some moves. Tesla's rebounding some here as well. Looking at Apple, also, guys, Apple's flying up to 234s right now. 234s. Again, the market did react positively to this payroll report. We're a couple minutes into the market now, but most blue chip stocks are running up. Supermicro is up as well. Tesla pulling back a little bit. Netflix is too. And this is what I'm trying to tell people, like, ignore the haters. Like, no, I'm usually pretty on par with what the market wants and doesn't want. So, like, if you want to know what the market might want in any economic report, you got a lot of people that always just kind of go with convention. Ooh, the market wants more jobs. The market wants low unemployment. It's not always the case. And so if you want to truly track it, subscribe, hit the notification bell. I appreciate the love. I'm not saying I never get it wrong. I could certainly get it wrong, and I'm not an investment professional, but we've been pretty accurate with it. So... yeah, Netflix popped up to 1023s. Tesla ripping up to 376s. Again, I'm definitely not going to short this market. We're only 2 minutes in, though. Hey, nice van. Yeah, I would practice first. Well, no, I think this resistance, and nothing's going to work 100% of the time. And so these are just levels on a chart. They're never, like, if we get enough momentum like the opening bell, it's going to fly through levels. I don't expect these levels to hold it every time, right? I just expect them to confirm sometimes. And once we slow down to maybe base it around, I'm not trying to find the, like, it's going to be impossible if the market has enough momentum for every level to hold exactly right based off of how many levels I have on my chart. If all the levels held and never were broken, then the market would never go anywhere with this many levels. But that's not what they're for. They're just for, like, at this point in time, we'll see if we can hold support here now, or see if this turns into resistance up here. Like, the levels aren't supposed to always work. Your accuracy is usually on point. Hey, thank you, sir. Appreciate it. Yeah. Hey, what's up, Tiny? Good morning. Good morning. Hope you're doing well. Yeah, so now we can look to see if this holds support. The momentum is very strong right now, though. Meta's ripping up too, breaking lifetime highs. I think this is lifetime. Yeah, Meta breaking lifetime highs. 722.80s for Meta. Still up there. All right, we're 4.5 minutes into the day. I still got to just chill and wait. All right, so now we're falling. See if we can get a little dip by here. I don't mind a dip. Not big enough. Definitely not dippy enough to dip by there. I'll have to wait. Too big of a retracement. Alright. I like that dip, but we didn't quite get my level here at 930. I want 930s. Didn't quite get it, but that's okay. We'll add some to this if we can get it. 3, 4. Alright, we'll keep 4. I'm gonna take half off just in case it keeps breaking down roughly flat, and then give the rest a little bit more room. There we go. I'm out. Got about right there, and this is why I leave the levels up. You can see that bounce. Look at that bounce right there. That's why we leave the levels up. This is a big retracement back up though. Broke highs. Hello? Hello? Sorry guys, my daughter's asking me for money, so I had to kind of pay her some money so that she could buy some stuff. Alright, so we went up there to 970s. Amazon still looks strong, so I'm a little bit more bullish here, but I'm watching the rest of the market, which is kind of in a state of pullback for a lot of stuff. So see what Apple does here. All right, so we got a cushion on the day. We can use that cushion to take larger risks now. But we got to wait for some good stuff. I don't know why, but I'm a little short biased here. I might be wrong. Don't copy me, but who knows what we're going to get. Yeah, there's a drop. I don't know why I'm short biased. Wait. No, Amazon's popping up, so short bias is gone now. Meta's still shooting up. Apple's pushing back up. So, yeah, things are looking pretty bullish. That wasn't... Yeah. Amazon's creeping back up. Gold's breaking all-time highs. Not quite all-time highs. Close to all-time highs. 2906 is all-time. I'm just waiting. I don't see early. I gotta wait. I don't know, Daniel. It's up to you, brother. Market's very chopped right now. I'm just gotta chill and wait, I think, a little bit here for me personally. I'm watching Meta closely. Meta's flying up though. Breaking all-time highs over and over and over again. It's pushing up towards it now. We also have Michigan consumer sentiment data, I think, coming out later too. So just be ready, chat. Again, if you want to day trade with me, I'm on Top Steps funded account program. They give you a demo. They test your skill with it. You pass the test, they fund you. You fail, you only lose what you pay for it. The base one's $49. So it's kind of a great middle ground of pressure. Teaches you how to trade less risk than risking 10, 20, 30 grand. No PDT in futures. You can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. Top Step gives you a demo, and they test your skill with it. If you pass their test, they fund you. If you fail, you only lose the monthly subscription, which is much less than 10, 20, 30 grand risk like most day traders end up taking. If you pass it, you get to keep your first 10K in profit and 90% split afterwards. So it's very similar to funding your own account, just less risk. If you use Top Step X through my link, there's zero commission as well, so I can make 23, 20 small amounts of money and still net profit. Great way to learn how to day trade. Kind of like a souped up demo account, and most day traders lose. It's a lot cheaper usually to lose here than it is to fund 10, 20, 30 grand and lose that. And so if you want to check it out, there's the link. Great way to help support your boy here in this channel. They're an affiliate of mine though. I'm biased because I get paid by them, so I'm biased of course. But if you want to check it out, there's the link. Appreciate the love. There's no Fed report, Fabio. There is a Michigan consumer sentiment data. The University of Michigan produces consumer sentiment data typically every 2 weeks on Friday. Today they are expecting... Oh, wait, we do have a monetary policy report. We do have a monetary policy report. I'm sorry. Actually, you're correct. Yeah, this one's titled The Conduct of Monetary Policy and Economic Developments and Prospects for the Future. Market's still heading back up. Gold's still popping back up. Amazon's ripping back up too. Let me see. Yeah, I mean, I'm looking this up. It's definitely not the Fed minutes report. It says there's one today at 10 a.m., but I'm trying to find more information. I'm trying to see if it's documented anywhere. Yeah, we got Michigan consumer sentiment data, but all right, so 10 a.m. February. Yeah, so I'm not sure what this is. I know we have... let me make sure this is not the house. Because next week we have Jerome Powell speaking in the Senate. It's going to be next week on Tuesday. I'm trying to make sure that's not today. They're saying testimony from Powell today? I don't think so. Let me make sure. All right, Meta's testing highs. Yeah, I'm looking at Bloomberg. Where's the House's website? There's the Senate. There it is. Schedule. Yeah, so it's not the semi-annual monetary policy report. So Tuesday we have Jerome Powell with the House, or with the Senate. Wednesday we have him with the House on the 12th. I don't know what happens at 10, but we'll cover it if it's something big. Federal Reserve monetary policy report. Yeah. Yeah, so we might get the one that dropped last March. Okay, so we might get the monetary policy report. I'll look around. Yeah. So we actually might get one today. I'm going to go ahead and believe it, but if we don't, I might be wrong here, but yeah, I don't know. Yeah, we got 12 minutes. All right, chat. Let's see what we get. We also have the Michigan consumer sentiment data. Sorry, I'm trying to track this to make sure. Market's very flat, bouncing off of my level. We'll stick around and cover it just in case, but I'm not 100% sure yet if it's a. Yeah, green is good. Meta's still pumping up, guys. Very strong. I'm going to buy this dip. I know it's kind of like buying the top. It's a little risky, but I kind of like it. So. Small little baby gain. Meta is down to 725s. Back in micros here. There we go. Let's see if we can add some to this and take a swing based off of the profit we have already on the day. There we go. Beautiful trade. I'll take it. Made about $30 more there. Good. I still don't know if we're going to get this monetary policy report or what. All right, guys, gold pulling back. Markets are definitely stagnating. I'm wondering if the monetary policy report is what's gonna influence this. Bowman is also speaking right now too. The White House says jobs data underscores the necessity of pro-growth policies. Sitting tight here, very stagnating, but bullish nonetheless. Yeah, so Bloomberg has a monetary policy report dropping in 8 minutes. I think it's the Federal Reserve's monetary policy report. Let's look up. Yeah, so this is true. So on March 1st last year, they submitted a report called the Semi-Annual Monetary Policy Report, or the Monetary Policy Report by the Fed, right? It's a document, and then a week later, Jerome Powell testified before the House and Senate. That's what we're going on today. Next week, he testifies in front of the House and Senate again, and I think today is when we get the Monetary Policy Report. And so I think that's what's dropping in 10 minutes, but we'll see. Nvidia pushing up to over 130 still. Supermicro up. Google down. So again, in 6 minutes, we have inflation expectations by the University of Michigan as well. So we'll see how much all this affects markets. Look at that 960 level top. Pull back. Amazon pulling back. Some other stuff pulling back too. Supermicro dipping down. SPY running. Yeah, it's stagnating, man. The market's been flat since basically the opening bell. So here's the opening bell right here, ripped up, and then sideways action for the last like 25 minutes. I'm trying to just sit tight and wait. All right, guys, sitting tight, waiting for this monetary policy report, potentially. Michigan consumer sentiment. Three and a half minutes watching some other stuff, but market's starting to fall down. Hey, we got over 500 likes. Thanks so much, chat. Again, we broke 155,000 subscribers. Hey, thanks so much, chat. All right, look at this pullback here ahead of this report. 3 minutes left. Chat, 3 minutes. Look at this dip. I'm going to buy this dip. It's dipped enough to be dippy. We'll add to it. Took half off. Took another piece off. I'm gonna cut it. I think we might come back down a little bit now. We bounced enough, but I have about 100 on this one. All right, guys, 2 minutes. 2 minutes. All right, guys, here we go. Let's see how this impacts markets now. One minute. Yeah, we're just really selective. You see, I'm not trading all the time. Like, I'm just trying to be selective. I buy when I think there's an edge and I wait. Or usually it's like, again, we talk about this exact strategy in the video that we published. All right, guys, 20 seconds for the Fed's monetary policy report to drop, Michigan consumer sentiment to drop, Michigan consumer expectations, inflation expectations to drop. Be ready here, guys. Let's do this. Let's see what we get. 5, 4, 3, 2, 1. Here we go. And we are out. Michigan consumer sentiment data showed up lower than expected everywhere for consumer sentiment, current conditions, and consumer expectations. And the market did not like this. It is down big on the consumer sentiment and expectations report, guys. Michigan consumer sentiment came in at 67.8 versus 71. Way worse than expected. Consumer expectations came in low. Way worse than expected. Inflation expectations 1 year went up to 4.3%, chat. 4.3% for 1 year inflation expectations. 5-year inflation expectations at 3.3%. Way higher than expected, chat. Way higher than expected, and the market is dumping down. So yeah, Wow. Dumping down. I'm trying to see if there's the monetary policy report thing. Wow. What a drop. Taking away all the gains. So we got some optimistic looks at inflation, and then we got some worse looks. Yeah, we'll put this data up on screen. That's making this drop happen. University of Michigan 1-year inflation prelim came in at 4.3% for inflation. Look at that. That's what's making the market panic. 3.3% inflation here. We put the data up on screen or in chat. That made the market panic. It's inflation expectations for 1-year prelim. 4.3% for February. Crazy. Yeah. Look at this drop. Still dropping down too on those inflation expectations. And I think what we're going to see now is the market overwhelmingly fear inflation more and more. Look at this drop. It turned everything else around. Everything that was going up is now going down on this report. Crazy high inflation expectations. Prelim data, but man. Look at this drop. Again, crazy high inflation expectations. 4.2%. Or no, is it 4.1%? Wait, let me see. Either way. Yeah, guys. That's what's making them. Oh, it's 4.3% actually. I'm sorry. 4.3%. That is what makes the market tank. Part of me wants to buy it, but sheesh, dude. Crazy. Yeah, and unfortunately, I don't think we can see the Federal Reserve report. I'm looking for it, but hello. Hey. Market is in turmoil, guys, after the University of Michigan inflation expectations were way worse than anybody expected at 4.3%. Everything is turning down big here, guys. Inflation expectations way worse than expected. 4.3% inflation expectations by the University of Michigan, and these are 1-year short-term inflation expectations. Again, 4.3%. I'm going to put this up on screen. This is what's causing the craziness right now. Again, this is what's causing this massive drop. Crazy. .3%. Market's still dropping. This is bad. This is going to make everybody panic. And that's what we're seeing right now. They get a whopping 4.3%. Guys. 4.3%. Crazy. Yeah, again, the reason the market's down, a whopping 4.3%. Crazy, crazy, crazy. All right, starting to get a little bit of a rebound here. I don't know if I want to short and try to ride it back up. Yeah, Apple down, Netflix down, Nvidia down. The real question is, do you buy this dip? I don't know. I'm going to short it. Take half off there. Ride the rest down. Take profit out. I don't know. It depends on time frame. I'm going to short this little pop is what I did. Amazon breaking. Lows again. Pretty good trade so far today, man. We've only lost like a couple times out of like 20 trades. So yeah, man. I mean, this drop inflation expectations tanking markets. Gold's ripping up in fear. Nasdaq's down to 520s. SPY down pretty big too. Doesn't mean anything yet though. I mean, it's still early in the day. All right, guys, I'm gonna get out of here. Again, a pretty good green day. Y'all have a great and happy weekend. Again, if you haven't already, check out Top Step. No PDT rolling futures. You see me day trading, very similar to day trading stocks. They're an affiliate of mine. I am biased because I get paid by them. Remember, I have no idea what I'm talking about. Might be wildly wrong about anything I say. It's for entertainment only. My experiences, wins or losses. I might lose off stream and you might not see it. Don't copy me. Understand CFDC 4.41 hypothetical or simulated performance have limitations, guys. I also, some of these links are affiliate links, and so I'm biased in their favor. But again, Top Step, really good way to learn day trading. Most day traders lose. If you put up your own 5, 10, 20, 30 grand, you're probably going to lose it. Let's just be honest. Instead, try a funded account program. They give you a demo. The base one's $50K demo. If you can make $3K without losing $2K first, following all their rules and conditions, and you want to confirm all this with them first. But if you can do that, they fund you $50K with a 90% split, and you get to keep your first $10K in profit. Very similar to funding your own account, 90% split. And if you're good enough, you can build up your own profit, withdraw it, and then fund your own account with it. But if you fail, you're out $49. Your risk is limited. Great way to learn how to day trade. Souped up demo account with some extra cool stuff with it. Great way to learn. And honestly, it helps build your skill. Teaches you how to trade a little bit better too, in my opinion. But again, I'm biased, as I always say. If you want to check them out, here's the link in chat. Great way to help support the channel. Yeah. Again, I'm going to get out of here. Y'all have a happy and safe weekend, guys. I love you all. Y'all have a great one. Good luck. It's been a fun week, a great week. We got 15,000 or so views for today's report. So thanks so much, chat. Appreciate the love. Really do. Thanks so much. Y'all have a great day.